Hello, everyone. Apologize for the late start. We had some technical difficulties, so thank you so much for being patient while we sort things out. I really appreciate each one of you tuning in today for our interview in regards to business insurance and what you can do to help manage your current situation as far as your insurance is concerned. Um, my name is Kyle Griffith. I'm the founder of the M&A Alliance and managing partner of the NYBB Group. For those of you that are new to the M&A Alliance, we are an exclusive group of trusted advisors that provide M&A advisory services to companies that are looking to either expand their business, grow via acquisition, or they need assistance in their exit strategy. Uh, in this particular interview, I have one of our alliance members. His name is Mr. Stephen Alberti. He's a commercial insurance broker with the Rampart Insurance Services Group. He's a very good friend of mine. He's also a member of the alliance, as I said before. He has been in the insurance business for 40 plus years. So he has a lot of stories to tell. He has been through a couple recessions, right, Steve? And, he's going to share some information, his insight on the insurance industry and how he can help you and folks that are listening on how to manage your particular business insurance situation. So, Steve, can you hear me loud and clear?
Yes, you sound perfectly good. My apologies with the technical delays we had.
That's okay. I think as long as we can hear you, that's fine. So we won't be able to see you today, but I'm glad he's able to make it on nevertheless. So I appreciate you taking the time to join us this evening. So a couple housekeeping activities. So all the lines are muted. This interview will be recorded, so you get a chance to we'll send you a copy of the recording. Um, so I'm just going to ask Steve a couple questions. This will be a casual interview. I'm curious myself to learn, some of the ins and outs of insurance policies and how we can best advise our clients in our situation. The audience for this particular interview are CEOs of low to mid-market companies, and everyone is kind of curious to kind of learn more about how they can manage their potential insurance when it comes to business interruption claims, workman comp, and so on. So Steve, if you don't mind just sharing a little bit about your background and your firm, and then we can just jump right into the interview right from there.
Sure. As Kyle said, I've been in the insurance business over 40 years. Originally started with Liberty Mutual, both as a claims adjuster and as a commercial lines broker for them in Manhattan. I've been with Rampart 38 years. Fairly varied book of business, although I'd say the predominance of it today is in real estate, construction, professional liability, products liability, workers' comp related coverages. We have 150 people in the office. In addition to the commercial lines, we have a fairly large personal line, which is homeowners and auto, personal coverages, plus another 40 people in our benefits department for health insurance and life, disability, long-term care coverage.
Thanks, Steve. And you didn't mention about your skills in the musical instruments.
No. Right. Yeah, I'm a musician on the side.
Yeah.
Play the French horn and trumpet. Play with a couple of community orchestras, community bands. I'm in the Coast Guard Auxiliary. Play in the Coast Guard Auxiliary Band. So that's kind of my other little career gig on the side.
It's a nice way to relax, especially in these times, right? I mean, a lot of people are hurting right now in all different types of ways, and it's good that you can have some you can actually, pull from as far as your music background is concerned. Relaxing.
Correct.
Let's talk about risk management. Okay, what are some steps that business owners can protect themselves or as it relates to COVID-19? What are some things that they can do right now as it relates to risk management?
Well, really, what we're trying to do is risk avoidance and risk prevention. First thing on a practical level, to reopen, let's say on May 15th here in New York, Governor Cuomo is allowing us to reopen the economy in stages. So if you're an office or a manufacturer, we strongly recommend you follow the OSHA guidelines to reopen. First of all, that would be doing a deep cleaning of the office or the factory industrial site. Social distancing is very important, and may very well involve having to reset the architecture in an office or in a workplace. So, typical cubicles might be 4 or 5 feet apart, 6 feet apart, but the people sitting at the desk may actually be closer than that to each other. So, in many cases, it may require a realignment or setting of personnel who are out in open areas. And of course, we know the hand washing is very important. Putting up screens and barriers. Staggered hours you'll see for a lot of businesses. I believe they're talking about a 25% started bringing people in the office at my firm at Rampart. So if we open up as May 15th, we'll start bringing more people on. Now we are considered an essential business, so we have been open, but with virtually all of us working from home.
You mentioned, having cubicles 6 feet apart. The hospitality space, which has been hurt, restaurants and so on, they're talking about probably reopening. I want to think it's June 1st is what I heard. They're going to open at some point. They're advising to kind of space out tables and space out the seating arrangements for restaurants. So this doesn't just only apply to offices, right? This applies to in other areas as well. You're going to see like in theaters and so on. Is this going to be a norm moving forward, or no? From insurance,
We don't know. I think a lot of it will depend on the CDC and how whether we see the curve, the cases decrease, and then it'll be opening up in stages. But certainly here in New York, you would be doing that type of 6-foot distance. So obviously for a restaurant, they can't have as many customers in or a retail store. So those are the realities we're dealing with.
So if you're reviewing a policy, I'm assuming is that part of your review and audit process? I'm assuming you're updating all of your policies now to reflect CDC requirements, correct?
Yes. Well, the OSHA CDC requirements, are irrespective of the insurance coverages you have. What I have recommended is to review each policy. Do you want me to go through that a little bit?
Yeah. Let's talk about that and some of the coverages that should be reviewed.
Okay. Certainly, you have the property policy. You have the general liability, which may include products liability. If you're a publicly held company, you may have directors and officers liability. If you have any business autos or trucks, it would be a business auto policy. Workers' comp, of course, is mandatory, as this is New York State disability. Another important coverage is employment practices liability. So each one of these should be looked at in terms of what your exposure is as we reopen in the economy.
Got it. And for those of you that have questions, to your top left, you're going to see a chat function. If you have questions for Steve, be sure to submit it in the chat. If we don't get back to your questions, I'm going to send you an email. I'm going to post an email address you can send your questions to. But we had a little bit of a late start, so we still want to keep on time. Kind of want to be respectful of everyone's time here. So if you have questions, put it in the chat, and then if we have time at the end, we'll definitely get your questions answered. Let's talk about business interruption claims. I'm hearing that a lot of the carriers are not even accepting or not approving any of these claims because it's not part of the policy per se, right? So can you explain or kind of clarify, give some more in-depth information about what business interruption coverage is?
Yes. The definition of business interruption coverage is there generally has to be direct damage or loss to the premises or to the business to trigger the business income. So, for example, you have a fire, you have an explosion, you have vandalism, you have vehicle damage, you have water damage, any kind of a direct loss to the premises of the business. So, if the direct damage itself is covered, automatically so would be the business income. Business income would pick up all your continuing expenses and your net profit while the repairs are going on in your period of restoration. So the problem with with the COVID virus is people are suffering a loss of business activity, a loss of economics. They have not suffered a direct loss or to the premises, to the business. The second coverage hurdle is that virtually all the policies since 2006 have an exclusion for bacterial and viral losses. And this was put in back in 2006 after the SARS epidemic. So it was never the intent of the business income policies to pick up a pandemic that we're looking at right now. Nor did the insurance companies collect any kind of premium that could have possibly given them the reserves to pay out a claim like that.
And as a
These are the issues.
And that's the first thing when this happened. Everyone's, even me, we looked at our policy. I mean, that's the first thing you want to look at to see, are we covered? Everyone's kind of frantic to just review their policies and was calling their insurance brokers just to find out, first of all, are we covered? I know a lot of your customer store was angry that it wasn't in there, but that's just part of it. It just wasn't covered, right? So there's nothing really can really do about it, right?
Well, as it stands so far, I think as of yesterday, Rampart, we've had 551 claims reported, and these are probably with 20 different insurance carriers who we represent on direct or excess basis. A lot of the claims are in the pipeline, but I would say so far we have not seen a single insurance company agree to pay a business income claim. As they're being processed, they all so far are being denied coverage.
Yeah, it's unfortunate. I mean, one thing I'd like to hear from you more about, Steve, is so a lot of businesses are feeling the hurt right now. Some are not able to reopen. Some have a loss of business. So I believe in the first, when this whole pandemic first started, everyone is trying to survive, right? Trying to cut back costs and see where they can cut back. The PPP did help to some extent if you can still stay in business and you can afford to keep your employees and you still have business coming in, you can take advantage of that. Not every business necessarily want to have any additional debt, additional loans. So the disaster loan does help to an extent. But when we advise our clients, you want to help them in different ways they can reduce their costs. So let's talk about business insurance. What are some tips that policy owners can do to reduce their insurance costs to kind of help them kind of get through these rough months?
Sure. First of all, you want to review your property values. If you insure the building, there's not too much we can play with in terms of the building coverage. But certainly if you have an inventory of contents, business personal properties contents on every policy, if, for example, you're a manufacturer, or distributor, or retail store, your insurance was based on the inventory and supplies that you have on hand in the business. So while you're closed, you still generally have to maintain your insurance to be compliant with your lease, and of course you want to protect your assets. But if it turns out that you only have half as much stock or inventory on the premises you had before the quarantine, that's an area that you could reduce the coverage and, of course, reduce the premium by adjusting the inventory. Now, it can also go the other way. I, for example, have a commercial client. He's a bean distributor. He repacks and sells beans to restaurant wholesalers, to supermarket chains. So right now, beans are in high demand. They're running 24 hours a day. He has more inventory on site he's ever had before. In his case, we've had to increase his inventory to cover the extra stock on premises because of the increased demand. Another important area to look at would be the general liability. If you are a manufacturer or business, generally you may be being charged based on revenue, gross sales or revenue. If the revenue is down substantially, you may be able to have the insurance carrier readjust the estimated sales if they do a sales audit on your policy. If you're a contractor or certain types of manufacturers, they may be charging you on a payroll basis. And again, would be true if your payroll is 20% of what it was before. That's another area of review where you may be able to reduce the estimated payroll on the general liability, the products liability. That also ties us up into workers' compensation. The workers' comp is based on payroll classification based on the specific jobs. and each classification has an estimated payroll that at the end of the policy year is subject to audit. So you want to review those payrolls. You may have workers you've had to lay off that are not in working currently in certain classifications. You may have employees you've kept on where maybe you only have 20 or 30% of the estimated payroll exposure that you had when the policy was renewed. So that's another area you could look at, particularly if you're coming up to the policy renewal and you have the audit coming up, to readjust, to examine those payrolls and classes and see if they can be revised.
Yeah, now it's definitely a good time to review your policies, right? You can cut back. You probably have less employees and inventory and so on. And the insurance reviews, that's twice a year, right? That the insurance carriers review their policies. I'm assuming that rates may go up, right, based upon COVID.
Very
So
possibly.
that would be in
First of all,
January, right? If I'm correct.
Well, insurance carriers have what we call the reinsurance treaties, where they go out and they buy their insurance coverages for their book of business. That's generally done twice a year in January and July.
Right.
We were already starting to see a tightened market based on the property losses of 2019. There was some substantial property losses that have brought up some of the property rates. In certain classes of business and liability, we haven't seen large increases. On construction, particularly here in New York, we're seeing large increases because of all the claims activity that's been going on.
Mm-hmm.
So it has to be looked at a case-by-case basis, what type of class of business you're in and what's happening on the pricing.
Interesting.
But it can actually be a good time to shop your insurance because right now insurance carriers know they're going to lose business as companies go out of business, and the ones left are reducing their exposures. So believe it or not, in this market, they are looking to write new business, and sometimes it may be a good time to move to a different carrier who may have better rates.
Let's talk about another hot topic, Steve. Employees and illness-related absences due to COVID. Are employees covered by workers' comp?
That's a very interesting situation. Traditionally, workers' comp picks up injury or illness on the job from an injury that occurred during the course of work on the job. Disability is basically for off-the-job illness or sickness. So generally, a virus like COVID would be assumed that something you picked up away from the job site. So normally, that would not be covered. However, there is legislation here in New York, Department of Financial Services, and I think across the country, where they will now deem any first responder, people in medical offices, doctors, nurses, EMTs, people in medical labs, anyone involved who may be in contact with the COVID virus, that if they do come down with the virus, they will assume that it is work-related and therefore covered under workers' comp. So it's actually an interesting situation where the policies and the regulators are trying to react to the situation we have today and cover those who may have legitimately picked up COVID virus in the course of their employment.
Well, I mean, I just had a big article, a big news story on Tyson Foods, and not just Tyson's, other companies that, employees are claiming they either got sick, on the job, or they wasn't provided enough PPE equipment, and some of them spoke up, and they have been, I want to say they were threatened, but they have a risk of losing their job if they confront the employer about the equipment needed. So, I mean, how do you know where you got ill from? There's no way you can really prove that it was at home or from at the job site.
Right. Well, I think you may see a broadening definition of perhaps certain types of jobs and classification where they feel there would be a high likelihood of where they may have picked up the virus.
Right, makes sense.
What I'd like to transition to is an important policy that we haven't discussed, which touches on what you're saying right now, and that's employment practices liability coverage. It's a very important policy to have. Generally, it's a separate standalone policy, and it protects the business from suits by employees who may claim that for example, they may have been discriminated because of their age, their sex, their sexual orientation, their ethnicity, their religious background. They may have been denied proper pay. They may not. They may be in a hostile workplace or sexually harassed. Another common area is wage and hour disputes, where the employer may claim they're not being paid the proper minimum wage or proper overtime. So there are already right now about 100 class action suits all over the country where employees, for example, like the Tyson meatpacking plant, where they're claiming where the employer did not provide the proper safety equipment or safe workplace. And this is a whole new area of litigation that we're seeing on employment practices liability based on the workplace with the COVID virus.
Interesting. Good point. We are approaching 6:30. I do want to switch over to the Q&A. I just want to get some questions in from the attendees. Let me go first to. I'm just going to read the question out, Steve. Okay, because you can't see it here. Okay, so this question is, what about the beauty, barber, nail, and massage industries? My company denied my claim, stating that COVID-19 is not covered. They did, however, advise me to keep the denial docs, since they're hoping that the federal government may look at it later in the future for possible government assistance in paying the claim.
That's actually very good advice. Every one of our clients at Rampart, if they want us to report the claim, we do, and we tell them that so that they protect their rights in case there's a change in coverage or legislation. We actually have a little 1 or 2 sentence wording that we had them send back to the insurance carrier once they deny the claim to preserve their rights for reconsideration.
Mm-hmm.
Because I think what will happen down the road, and we don't know how long this will take, there will probably be some kind of a federal legislation or some kind of federal fund or backstop that's going to have to be provided if we're going to cover these business income claims. The insurance carriers don't have the assets or the ability to pay every single insured on the exposure on the claims that they have, without all going into bankruptcy. So, when clients do report the claim, we keep this on file so that their rights are preserved in case there is a change, either on the state or federal level in terms of coverage.
Mm-hmm, mm-hmm. I have another question here. It says, doesn't workers' comp have limits as to what they pay, like a broken arm? How would that work for COVID?
Well, on workers' comp, you have 2 aspects. The medical is unlimited. If there are medical bills and expenses, that if it's deemed an injury on the job that's workers' comp, it doesn't go through your health insurance. It goes through the workers' comp insurance carrier. So the medical would be picked up in full as long as they feel it's a legitimate bill as a result of the illness being covered as workers' comp. The payroll is paid, I think the cap in New York, I think is $680 a week. So, they will cover you for lost wages up to whatever the cap is in your particular state. And the coverage could be temporary. It could be you might, on a workers' comp claim, there could be a permanent disability, a partial permanent disability, and those things are adjudicated later on. But generally, the workers' comp will pick up a certain portion of the lost wages and all the medical costs.
Thank you, Steve. Final question. How about accounts receivables insurance? Can it be issued going forward, and under what terms?
Well, again, the same problem is, the COVID, the virus is not going to be covered as a cause of loss.
I got it. So repeat that. So you're saying that won't be covered?
I don't believe it would be.
Okay. Steve, before we close out, any last insights or tips you want to shares any opportunities in today's insurance market that is someone that's actually looking for new policy might want to consider taking a look at, or any tips in general before we call it a day?
Well, as I said, it's good to review your policies anyway, but this is particularly a good time to do so to see if you're properly covered in terms of the exposures, the payrolls, the sales, the inventory. And also, as I was speaking, the employment practice liability coverage, I think, is more than ever a very important policy to have. And if the client doesn't have it, I would strongly suggest they get a quote and consider purchasing it. And if you do have the policy, look at the limits, look at the retention, which is deductible, and see if you want to make any changes on that.
Thanks, Steve. One last question coming out, squeezing this one last one for you here. Is employment practices liability coverage generally put under the BOP?
Some companies are giving some limited coverage. Hartford, for example, will give you $100,000, but it's really limited coverage. We really advise buying a separate standalone policy. Sometimes, for example, if you have a director's and officer's policy, some carriers will write a joint D&O EPO policy. We do see that on occasion. So there are some carriers that are offering it on the BOP. It can be limited. Certainly, if you have it, it's good that you have the coverage. It's better than not having the coverage. Now, someone like Chubb will provide a broader coverage than perhaps another company.
Thank you, Steve. So, Steve, I really appreciate your time. I think next time we have to do this again. Next time we can get you on camera because you're a pretty good-looking guy. People want to see what you look like. So maybe you have
with the sport jacket and everything. I apologize on the technical issues on this.
Yeah, this is an ongoing thing. So I know we did one last week with Doug Lieberman. We spoke about the litigation aspect, but the litigation and the insurance kind of tie in hand. So maybe I have you guys come back and do a duo and have and kind of do a follow up. But I really appreciate you coming on. Appreciate your time as well. So we do have some upcoming forums scheduled. The next one we have scheduled for May 14th, which is next week. This one is geared to investors and buyers of businesses that are looking for some creative ways to make acquisitions. It's scheduled for the 14th. We may push that back just because I want to give some of my panelists some breathing room because they have been focused primarily on PPP. So they've been working 6-7 days a week. So that date is tentative. However, on the 19th, we're going to be talking about a contingency plan. So you've been through this downturn, and were you prepared? Maybe, maybe not. But in the event this happens again, you want to make sure that your business is in a position where you can actually thrive in an economy like in a situation like this, a pandemic like COVID or any other downturn in the economy. Steven's information. Stephen information is actually on our website, so you can contact him there. But Steve, you want to just share everyone your information, Rampart Insurance, and how we can get a hold of you, the website, how we can reach you, how they can reach you directly?
Sure. My email address is salberti, ALBERTI, at Rampart, RAMPART, insurance, one word, .com. salberti at rampartinsurance.com. I am obviously working from home quite a bit. I will give you my cell number, which is 631-680-3414. And God willing, when we go back in the office, my office number is 516-390-3606.
Thank you very much, Steve. And if you didn't catch that, you can visit the M&A Alliance website, and Steve's contact information is there. So, Steve, thank you again, and thank you everyone for joining us. Sorry we ran a little bit late, but we started late, so we gave you 30 minutes worth of content and information on business insurance. Thank you, guys, and until the next forum, have a good evening and stay safe, everyone. Thank you.
Thank you, everybody. Be safe. Take care.